Mesiniaga started in the 1980s as a company selling IBM products and has since evolved into a multi-platform business solutions provider. The group's customers include those in the public, telecommunications, and enterprise sectors. Its performance over the past 12 years was not good. Revenue, profit after tax, and gross profitability declined. Profit after tax was volatile with losses for 5 years. There were similar patterns for the returns. Over the past 12 years, the average return were volatile and low. Return on invested capital averaged -2%. Return on equity ranged from -21% to 13%. Mesiniaga poor performance was because it was operating below its break-even level most of the time. There was only operating profit for 7 years during the past 12 years. This is a business with high fixed costs. This meant that a small change in revenue will have a big impact on its earnings. I compared Mesiniaga performance with those of its Bursa ACE and main board peers based on 6 metrics. Overall, I would rate Mesiniaga performance as about similar to the main board median performance. Although its revenue had been declining over the past 12 years, this is not a sunset sector. There is growing demand for ICT services in Malaysia. Over the last 4 decades, the technology landscape has changed tremendously. What Mesiniaga had tried to do over the past decade is not delivering the results. It needs to reset its business direction. Notwithstanding the poor operating performance, the group is financially sound with low debt-equity ratio and strong cash position. It has a good cash conversion ratio and a good capital allocation plan. I estimated Mesiniaga asset value to be $1.83 per share compared to its market price in May of $1.60 per share. Mesiniaga is undergoing a turnaround. Rather than project this turnaround performance, I reverse engineered the market price to determine the expected revenue. This resulted in an annual revenue of $285 million, which is higher than the past 3 years' average revenue. The market has priced in some expectation of a turnaround. The group is facing declining performance and needs a new business direction to address the changing technology landscape. Until this happens, it is not an investment opportunity despite being financially sound. The information presented here is for educational purposes only. For more details, read the blog article. Thank you.